Megaport, PointsBet, and CBA have all released their earnings result. So let's go through those earnings results together, and I'll think out loud so that you can understand what I personally look for in these earnings results. As usual, no, this video is not financial advice or recommendation for you to do anything. It's just general information for entertainment purposes. So without further ado, let's go! So let's start off with Megaport. As of recording this video, they're trading at $14.10 per share with a 2 billion market capitalization. I've made a video on Megaport in the past, and I've showed a couple tricks under my sleeve to understand both their business model and how they compare to other enterprise SaaS companies. So feel free to check out that video after this one. For the most recent half-yearly highlight, because this is a growth company, I'm looking for revenue growth. And the most important metrics to me when it comes to Megaport is monthly recurring revenue, total number of customers, and total installed data centers. The way I've thought about this is that the more number of customers Megaport are able to acquire, the more number of ports and services these customers will consume. And the more they consume, the higher the monthly recurring revenue. On top of that, the more the total installed data centers, the more Megaport will be able to attract customers. Now, I'm really glad that the North American market is growing super quickly at 51% compared to the same period last financial year. To be honest, I think that US is going to do majority of the heavy lifting when it comes to growth for Megaport. At the same time, if you look at other continents like APAC and also Europe, across the board, Megaport is growing at 39% compared to the same period last financial year. Now, when I dug deeper into their financial results, I can see that their profit after direct network cost margin is stabilizing at 51%. This metric is essentially their gross margin. Now, Megaport's OPEX is still eating away a big chunk of their EBITDA. And it's hard to blame them because this is a growth company, so they are probably trying to spend that cash to grow the company as quickly as it can. Now, digging deeper into their operating costs, you can see that the increased OPEX is coming from employee costs, professional fees, and general and administrative fees. Marketing costs and travel costs have come down quite significantly, and I think that they've said that it decreased because of the impact from the pandemic. I really don't see this increased spending as a big problem, but what I would love to see more of is Megaport extracting the sales employee costs out and then bundling it together with marketing costs, because that way it gives us more transparency around how productive is that sales and marketing spend. While I'm on the topic of good to haves, I don't really understand why Megaport doesn't report on retention rates. It's good that the number of customers for Megaport is growing, but if they're not staying, that is a challenge, right? With their balance sheet, you really couldn't ask for a better looking balance sheet. Current assets well cover the current liabilities by more than 6 times actually, with $144 million worth of cash. That is a huge cash war chest. And it's probably to give them room to grow into the giant they're supposed to be, or they could spend that money, acquire companies to grow even faster. On a separate note, you can actually see the light blue bar, which is the gross margin, stabilizing at about 51% as the revenue grows. And at the same time, the gray bar, which is the normalized EBITDA, is almost at neutral to positive. And I think that at a positive EBITDA margin, Megaport might just get a re-rating. Overall, Megaport's growth is definitely there. The EBITDA margin is almost positive. So I'm really excited to see what they can do in Q3 of the 2021 financial year. For the next one, let's talk about PointsBet. As of recording this video, they're trading at $17.20 with a 3.54 billion market capitalization. Now I'm going to go through a few of PointsBet's highlights that I think are super interesting. Now firstly, their active clients in the US have grown 222%. Imagine what those numbers would be in the next quarter after they take into account Super Bowl. For Melbourne Cup, they processed 428,000 bets. And generally, for a business like PointsBet, Melbourne Cup, or any races for that matter, are massive. This is where companies like PointsBet, Bet365 tend to unload 6 to 7 digits of marketing budget onto Facebook for events like these. And I really thought PointsBet going with Allen Iverson was cool. Getting Shaq as a brand ambassador for Australia is definitely up there. And it makes sense to me that PointsBet is getting an NBA ambassador for Australia because according to Google Trends, we love NBA here and not so much the rest, to be honest. You know who else would be freaking awesome to be an Australian ambassador in the future? Ben Simmons and LaMelo Ball will be freaking awesome, maybe after they retire, because during the season, I'm not sure they can actually be an ambassador for a betting company. You can dig into their gross wins or net wins if you want to, but ultimately for me, especially for PointsBet, I care about active clients, because these are the people that's ultimately contributing to turnover. And of course, I already said that US is growing at an amazing rate at 222%. But taking into account Australia, the active client pool for PointsBet have grown by 107%, so basically more than doubled. And an additional metric that'll be super interesting if PointsBet ever do decide to disclose is how much is each active client worth to the company. So this will be the equivalent of lifetime value. Because when it comes to the cost of acquiring a new client, you can guesstimate by using the sales and marketing costs divided by the number of new clients they got for this period. And by dividing about 43 million to about 109,000 new active clients, it costs approximately $394 per new client. But the question is, how much revenue can PointsBet generate per new active client over their lifetime? And having that understanding will help us gauge the unit economics of the business to see whether they will be profitable as they scale to the moon. Right now, if you take a look at their net cash flows and taking into account Forex, they're essentially burning about $68 million per quarter with $388 million worth of cash left. That means they have about 5 quarters of runway left before they have to go raise more money. Again, just reinforcing the active client growth. In Australia, it almost doubled. And in the US, it more than doubled, or tripled in this case. And if you look into Google Trends, especially in the US, you can actually see the recent spike. And that's an indication that the marketing strategy is cutting through the noise and it's getting more attention. Of course, getting Shaq and other athletes to be ambassadors are only going to amplify their brand. But these people are not cheap at all. So having them as ambassadors will also mean massive bills. So that's why I'm really curious how much is each active client worth to PointsBet and whether they can actually afford these people over a longer period of time. In the next quarterly or half-yearly report, we might actually see the combined impact of both launching iGaming in both Michigan and New Jersey and the impact of the Super Bowl as well. Okay, last but definitely not least, CBA. As of recording this video, CBA is trading at $86.14 with a 152 billion market cap. With the big four banks, it's actually not that easy to understand their earnings report, and I've created a video in the past to explain my understanding when it comes to the big four banks and what to look for when I'm evaluating the big four banks. So feel free to check out that video after this one. I left the link in the description box below as well. With the big four banks, I personally pay a lot of attention to their operating income, their common equity tier 1, not to mention their deferrals and loan loss provisions. So let's start with repayment deferrals. It seems like majority of the people are back to pre-deferral terms. That sounds good, but I think the real test is in the next quarter when majority of the mortgage holiday should end and the JobKeeper should also end. So the smoke and mirrors should clear and we should get a more transparent, clearer picture on what exactly is happening with the banks and across the economy. With CBA's operating income, I wasn't expecting a lot, to be honest, just because the interest rates are so low that ultimately impacts the banks to make money on their home loans and institutional lending. So you can see here that the operating income didn't really move, neither did the operating expenses. As you can see here for the loan impairment expenses during the second half of the 2020 financial year, which is really like the peak of the pandemic, quite a bit of loan impairment expenses. Now to build on that point, you can actually see that the loan loss rates, so this is consumer and this is corporate, you can see that corporate spiked when it comes to their loan loss rates. And if you look at the first half of the 2021 financial year, the loan loss rate for just this half of the financial year is almost the equivalent of the entire 2020 financial year, and similar to the consumer loan loss rates as well. And that's one of the reasons why I really want to see what the reporting is like for the next quarter, because the smoke should clear and I just want to know whether I'm worrying too much. I think that's enough negative stuff. let's talk about some of the positives for CBA. Now, home lending, credit card, and CommSec literally doubled when it comes to new accounts compared to the same period last year. And I have to say, even though I am a CMC Markets user, CommSec's platform is incredibly good with the research data and also security. You're really paying the transaction fee for those features. But what's really interesting to me is that it seems like, especially on the credit card approval side, the emergence of buy now, pay later are starting to impact credit card approvals. Okay, don't get me wrong, I'm not saying that buy now, pay later are causing the decline in credit card approvals. I'm just making an observation that it might be a major contributor on why it's declining. And home lending approvals surprisingly grew by 32%. I mean, seriously, what pandemic? Now, looking at a broader picture for CBA, again, with the low rates and the pandemic, it has really hurt them. So I didn't really expect the statutory profit to be better than the same period last financial year before the pandemic have hit. I think as the vaccine starts rolling out, as people go out, consume, build more businesses, I think that's when we'll see the banks start to recover. I'm super happy to see that CBA's Common Equity Tier 1 capital have grown by 90 basis points. And that just means that there's more equity capital within CBA to deal with any sudden shocks. Not to mention, having more capital in Common Equity Tier 1 allows the banks to lend out more money, to make money. Now, if that sounds super confusing, I've actually explained why Common Equity Tier 1 capital is important in my ASX Banks video. And the last point I want to make is that despite all of the critical things I've said about CBA, the one thing they've really nailed is their digital experience. The CBA banking app is so far ahead compared to the other big four banks, it really makes me feel like this. And I'm really curious about the quantitative value Kalana is bringing CBA, especially in Australia. Overall, I've kept my expectations for the banks pretty low. And even though it's good to read this earnings report, I am more interested in the next quarter's report just because as the smoke clears, I personally just want to know, am I worrying too much about loan defaults? So thank you for watching this video all the way to the end. If you want to support the channel, not to mention access to additional content pieces and be part of my fortnightly Q&A, consider supporting the channel via Patreon. Nevertheless, if you have learned something new, remember to gently smack the like button right there, subscribe to my channel so that when I release future videos, you be the first one to know. Until next time, my name is David. Otto will always do the honors and see you very, very soon.